Welcome to the March 2026 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. In March 2026, global GDP growth for 2026 based on purchasing power parity was estimated by Oxford Economics at 3.3%. This forecast relies on oil prices avoiding further spikes. However, the risk of prolonged energy instability remains a major threat to global recovery. Global economic activity is expected to stabilize looking ahead, with GDP growth in 2027 also forecast at 3.3%. At the country level, US GDP growth for 2026 was unchanged from 1 month ago at 2.8%. Growth is expected to weaken to 2.4% in 2027, but this will be dependent on productivity gains. In the EU, GDP growth for 2026 was estimated at 1.2%. Growth in 2027 is projected to rise to 1.7%, driven by Germany's fiscal stimulus. China's GDP growth for 2026 was estimated at 4.7%. Growth is expected to slow in 2027 to 4.4%, with net exports expected to be a key driver. India's GDP growth for 2026 was estimated at 6.7%, with the outlook for 2027 rising to 6.8%. In February 2026, EU natural gas consumption declined by 4.4% year-on-year, reaching 37 BCM. The reduction was mainly driven by lower heating demand in the residential sector, reflecting milder weather conditions across much of the region. Weather conditions varied across the continent. Western, Southern, and Southeastern Europe experienced above-average temperatures, limiting heating demand, while northern parts of Europe and the Baltic region faced colder conditions. Much of Western and Southern Europe experienced wetter-than-average conditions during the period. These increased precipitation levels supported stronger hydropower generation, which contributed to lower natural gas consumption in the power generation sector. Gas use in the power generation sector also declined, as strong wind output reduced the need for gas-fired electricity generation. Electricity generation in the EU increased slightly by 1% year-on-year, reaching 220 terawatt-hours. Due to the delay in data publication by the National Bureau of Statistics of China, gas consumption figures for January and February 2026 will be included in the next edition of the monthly gas market report. In December 2025, China's apparent gas demand recorded a growth of 10% year-on-year to reach 41.5 BCM. In February 2026, US gas consumption edged down by 3.9% year-on-year to 87 BCM, reflecting weaker demand in the residential, commercial, and industrial sectors. Residential and commercial gas use declined by 6.5% and 7.6% year-on-year respectively. Industrial gas demand also slipped by 2.7% year-on-year in line with softer manufacturing activity during the month. Total electricity generation in the US decreased by 2.1% year-on-year to 333 terawatt-hours. Natural gas-fired power generation declined by 3.7% year-on-year. In January 2026, global gas production grew by an estimated 1.5% year-on-year to reach 376 BCM. Most gas-producing regions, except Asia-Pacific, LAC, and Europe, witnessed positive production variation, with North America and Eurasia, specifically in the US and Russia, leading the growth. European gas production recorded a marginal 0.4% year-on-year decline in gas production to 16.3 BCM. This decrease in the European output was mainly driven by lower gas production in the UK and the Netherlands. However, the magnitude of the overall European production decline was limited by the higher supply from Norway's gas production. In January 2026, Brazil's gas production maintained its growing trend to reach 1.9 BCM, representing a 24% year-on-year increase, driven by lower flaring volumes and higher gross gas production. Meanwhile, in February 2026, US total gas production continued its growth trend, to record a rise of 4.8% year-on-year, to stand at 87.1 BCM. This growth reflected the favorable market dynamics, driven by the increased Henry Hub gas prices, along with the increased feed gas directed to LNG exports terminals. In February 2026, the EU countries imported a combined 11.6 BCM of PNG, which was 5% lower month-on-month, but 4% greater than 1 year ago. After 2 months of 2026, cumulative PNG imported by the EU reached 24 BCM, which was 3% greater year-on-year. There were significant increases in flows entering both Poland and France from Norway, and Bulgaria from Russia. In addition, there were 0.3 BCM of net gas imports from the UK via the interconnectors with mainland Europe. Chinese PNG imports in 2025 increased by 8% to reach 81 BCM. PNG imports in Q1 2026 are expected to rise, driven by the surge in flows via Russia's Power of Siberia 1 pipeline, increased heating demand amidst colder winter temperatures, and the favorable price differential compared to imported LNG. In February 2026, global LNG imports increased by 12% year-on-year to reach a record high of 38.2 million tons for the month, led mainly by exceptionally strong demand in Europe, where imports exceeded 14 million for the first time. Higher intra-regional trade in regasified LNG, lower domestic gas production and weaker storage levels supported this trend. Asia also contributed notably to the increase, led by South Korea. The premium of TTF over Asian spot LNG prices continued to attract flexible US LNG cargoes into Europe. On the supply side, global LNG exports jumped by 14% year-on-year to a record high of 37.8 million tons, driven mainly by stronger exports from Australia, Canada, Indonesia, Malaysia, Mauritania, Nigeria, Russia, Senegal, and the US. In February 2026, with warmer-than-average temperatures across the continent, the monthly average underground gas storage level in the EU decreased to 35.5 BCM. This represented 34% of the region's capacity and was 16.5 BCM less than the 5-year average for that month. In Asia, driven by previously high inventories, the combined LNG stocks in Japan and South Korea were estimated at 12 BCM, which was 2 BCM more than the 5-year average. In the US, the monthly average storage level fell to 58 BCM or 43% of capacity. Total net gas withdrawals during this winter season thus far reached 59 BCM. Spot gas and LNG prices moved unevenly across major markets in February 2026. TTF spot gas price fell by 6% month-on-month to $11.27 per million British thermal units, as milder weather, stronger wind generation, robust LNG send-out and steady pipeline gas imports loosened European gas balances. In contrast, Northeast Asia spot LNG price increased by 3% month-on-month to $10.74 per million British thermal units, supported by weather-related disruptions in US LNG supply and renewed spot procurement by major Asian importers. Meanwhile, Henry Hub spot price fell sharply by 51% month-on-month to $3.60 per million British thermal units, as milder winter weather reduced heating demand while strong domestic gas production weighed on US prices. In the short term, the escalating conflict in the Middle East is set to tighten global LNG supply and exert upward pressure on spot prices. Thank you for watching this short video presentation on the March 2026 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.